Years of skyrocketing home prices, the Bank of Canada raises interest rates due to inflation, and now we're seeing a decrease.
And it's already slowly going bust. No one is paying attention because the banks are too busy getting paid.
Is 2025 the year that the Canadian real estate market takes a turn? Stick around while we explore the key factors shaping the Canadian real estate market, including interest rates, inflation, the unemployment rate, and labor shortage in the trades. Is the Canadian housing market headed for a meltdown, or will we find a balance? Leave a comment below. I want to know what you think. After climbing to a peak of 5% in June of 2024, the Bank of Canada has finally started to decrease the interest rates. We're currently sitting at 3.25%. That's a 1.5% decrease in just 6 months. That's a big shift. What does that mean for real estate? Well, we've already started to see a bit of an uptick in the amount of buyers getting into the market and buying new properties. But since 2021, the interest rates are still quite a bit higher, and affordability for Canadians in the housing market is an issue. Although we have seen a decrease in the interest rates, people with variable rate mortgages are still struggling. It can be a challenge for people to upkeep that mortgage. And of course, as far as investors, it can be hard to make the numbers work when the interest rates are so high. So is this drop going to make a significant change? Now stick around to the end of the video where I share my unpopular opinion on what's going to happen to the housing market in 2025, and leave a comment and let me know what you think so we can go back to this in 6 months and either make fun of each other and laugh, or hey, maybe we'll hit it and we'll be right. Well, interest rates are coming down. Inflation is still really a concern. The cost of living in Canada is astronomical. The cost of building materials, groceries, and everything in between. I don't know how many times I've gotten an email saying, hey, guess what? Your bill's going up a little bit. And with stagnant wages, it's really a no-brainer as to why people can't afford to live in this country. Now, if you're a developer, a builder, an investor, to build a property right now in Canada with the cost of building, it's crazy. So you need to acquire the property. It's going to cost you a fortune. And then from there, the cost of building it, developing it, permitting, everything else in between just costs an absolute fortune. So the developer's left with selling the property at a high overinflated price, which just kills the market. So throw affordable housing out the window, because developers, they want to make money, or they need to make money to survive as well. And why are they going to build affordable housing if there's no incentive for them to do so? Now, this is why you're seeing in probably your local city or municipality, you're seeing a lot of multi-family developments popping up everywhere, because it's more economical for the builder or the developer to buy a small chunk of land and densify it than it is to build single-family homes. Well, the Canadian economy has remained relatively strong. The unemployment rate has slowly been creeping up in sectors like tech, retail, and media. For prospective home buyers, you need to have solid income and a good job to qualify for a mortgage, and even to be comfortable to take on a mortgage. On the other hand, stable government jobs and healthcare positions in cities like Ottawa and Victoria will continue to drive demand. One of the biggest hurdles for the Canadian housing market is our labor shortage. With an aging workforce and a lack of skilled trade workers, it is getting increasingly expensive to do construction projects, resulting in delays and costs rising. The federal government's immigration targets, while they are good for the economy, we have a serious housing crisis in Canada. There is not enough homes for the amount of people that live here and are coming to the country on a yearly basis. Now, when we have high inflation rates and developers not building as much property, this is only going to add to the crisis that we already have on our hands. Now, real estate isn't a one-size-fits-all. You've got larger cities like Vancouver and Toronto that are dealing with high prices and affordability. Then you're seeing cities like Edmonton and Calgary that have a lot of opportunities for buyers. Now, we might start to see an increase in some of the smaller and more rural towns as Canadians look for more affordable opportunities. However, However, regional unemployment rates and local economic factors will play a huge role in shaping these markets. So what's next for 2025? Here's my prediction. I think the Bank of Canada is going to continue to lower interest rates into the new year, but what we've seen over the last year to two is that developers have not been building as many properties as previous years. We're going to start to see a big decline in the amount of inventory on the market, driving prices of homes up. We still have a shortage of skilled trade workers, and the cost of building just continues to go up. Multifamily developments will start to gain traction in 2025 because, well, let's face it, who can afford to buy a single family home in 2025? Nobody has a crystal ball, and the Canadian real estate market is a constant teeter-totter. The key to success in 2025 is staying informed and adapting to the changing landscape. Like and subscribe to this channel for more key insights about real estate and the Canadian housing market. See you on the next one.